Live for the daily, well, every weekday anyway, the free beginner live lab for Algo Factory. If you want to know more about what we do over at Algo Factory, go ahead and check out this website, aka QR code. You can zap that or just go straight to www.algofactory.tech. Basically, what we do is we help people become traders and we help them build algorithms to make them money. So, at any rate, we just had some data come out. We're going to take a look at that in the news. We're going to see how the charts are going, and we're going to take a look at some potential trades that are going to happen today. So, let's go ahead and jump straight into it. Let me go ahead and bring up the data here. Let's see here, Tuesday the 15th it is. Yeah, see, let's go ahead and share the screen. All right, so what we're looking at here is right now we just had this Canadian dollar CPI come out, and that's all their different CPI measures year over year, month over month, median, trimmed. And then we had the USD core retail sales come out. Retail sales were, and I think the USD is going to matter more across the board. It generally almost always does. So what that means is that when you're looking at trading currencies, which we do look mostly at Forex here at Algo Factory. Now, of course, what we do at Algo Factory does translate over to stocks, it translates to precious metals, and anything that has a candlestick on a chart, we can help you learn how to trade. But Forex seems to have the most opportunities. It's a market that's open 24 hours a day, 5 days a week. It's got pretty much 3 different sessions. It's got the US Open, which is in about an hour. It's got the Asian Open, which is going to be kind of in the evening on the East Coast time. I think about 7 p.m., more or less, 7 or 8 p.m. East Coast time in the US, which is the sort of Sydney type Open or the Singapore Open. And then you have the European Open, which is going to be at 2 a.m. EST. So, those of you night owls can stay up and make some good trades, or even, get some good trades on it, after or before dinner, depending on what part of the country in the U.S. you're in. If you're U.S. based, of course, if you're European based, you can, do the math on the time. At any rate, though, the data here coming out today is going to also affect stocks. Is going to affect pretty much everything because everything is more or less based on the U.S. dollar, even across the world. And the way that affects the USD is also going to have an effect on the euro, so on and so forth. And the USD right now, we're seeing some core retail sales a little better than normal. So that should mean that the currency is going to get stronger and that the other assets against it will get weaker. Let's see here. Actual greater than forecast good for currency. Okay, so we have that. The Empire State Manufacturing Index is actually below expectation, which is going to be bad for currency. Retail sales up, core retail is up month over month. And they're both above expectation. So I would venture to guess that the sales number is going to outweigh the manufacturing index, but that might not be the case. What we have is mixed data. We have some things good for the dollar, some things bad for the dollar. And looking at the euro, now we're looking at the chart. I'm going to go ahead and zoom in here so everybody can see it. And I'm going to go ahead and open up some panels here to get some high time frame bias, and we're just going to review charts until people actually have some more intricate questions. We got some also new people in the chat recently here. Let's go ahead and start answering some questions in the chats before we get into the charts here, because look, after a news event like this, I generally let the market digest that news, and then I look for trades after that. So, as of now, it does seem that a lot of the money in the sidelines went short. I should say long in the dollar, or say short on the euro. I'll just take a quick look at this. We'll get to some questions in the chat. So everything kind of pumped, you should say dumped down. The euro dumped down. Gold probably went down. So in this case, what that is telling me is that the dollar got stronger and the core retail sales was the primary driver. Not a whole lot of movement on gold. Gold's just been on a downtrend for a while, which I did predict about 2 months ago live on the show. So, if you go back to our live shows, it might also have been in the private group. which we do, after this show. At any rate, though, I have predicted that gold would be on a downtrend, and I did that a couple months ago right here. So that this downtrend I did predict, and I predicted it pretty accurately. So, gold is going to come down and has come down to an older support sitting around the 1892 kind of area. All right. So, I do think gold will kind of continue down in this choppy fashion, especially in the month of August. August does not have a lot of volatility. You'll notice there are a lot more kind of these longer type candles, and then you have a lot of choppiness even in the downtrend right here. So the dollar is definitely getting stronger overall, and it's doing it consistently against gold, which means that it's going to do it consistently against a lot of other assets. And then you have the euro here. And the same sort of trend is happening. It's a little more jagged because the Europeans can raise their rates as well. So, but long story short, I do expect this to continue down, possibly short term, and then we'll have to look at some higher time frame to analyze that a little deeper after I take a look at the comments. We got Mavbet saying good morning. We've got Robert Press saying good morning. And in Valley Girl, we already saw that earlier. Tremendous Tuesday to all trading seekers out there. So, the way I trade in August is I look for real, it's going to be kind of scalp happy. And that is, how do I say this? A lot of your moves are going to be based on higher time frame pivots, right? So we'll talk about that in a minute. I do have question from Clown World, who is in our private chat. I love that name. About TradingView, do you use web or desktop? I use web, although Clown World, I was considering desktop. I was talking to my coder last week. Actually, I've been talking to him all morning. The algo and strategy is real close to coming out. But desktop, I think, is going to have less latency. So whenever you add a web-based component to something where latency matters, then you're going to want to use the app as opposed to the desktop, because you have to actually go through the servers. You have to go through your own ISP servers that have to translate to the web app, right? So if you use the desktop app, you're cutting out that translation. So it's going to cut down on latency. And that's why I would use the desktop. And the reason I would do that is because I actually use TradingView to trade my Forex account, which is on Oanda, and my algorithm is being built to translate the TradingView Pine code over to MetaTrader. So, any lack of latency running through two separate platforms is going to be a gift, right? Especially if you're trading in a low time frame. Robert says hi all in YouTube also. That's right. Robert is over in YouTube. Valley Girl says hi back from YouTube. Mavbet says audio is breaking up, Cowboy. Are you the only person who is experiencing that? That's what I want to know. Are other people experiencing the audio breaking up, or is it just Mavbet? Everybody, please, pipe up on that. I want to hear if that's a Cowboy problem or a Mavbet issue. That's what I need to know. In the meantime, while people are piping up, I'm going to go ahead and take a look at the EUR-USD chart. We'll take a look at whatever charts people want to say. Be good over in the private chat says audio is good. Mavbet, I think it's a Mavbet problem. Our private chat runs in Telegram, so ideally with Telegram, you're going to want to be connected via Hardline. So that's one thing we want to do. It's going to be stronger that way. Valgirl says her audio is okay. Robert Pressas asks, did you hear Mike Burry, the Big Short, just shorted SP 500? Yeah, I mean, I heard about that. Moron also says YouTube audio is good. So Mavbet, I think that's a Mavbet issue. Someone else showed me that article this morning, Robert. So, I mean, I can tell you the dollar's getting stronger. So, SP 500. I've been reviewing that on these shows. We can look at that today. So, we'll do that. So let me go ahead and drop a note real quick. Okay. By the way, the grill's going to be here. He's running just a few minutes late. I think he's on a call to some of his bigwigs. So we'll see him shortly here in about probably 5 minutes. So if he does what he said he was going to do. Good Mavbet, great. Like I need one more problem. Mavbet, I was the one having the connection issue just a couple days ago. So Let's get to the charts. Let's go ahead. I'm going to drop out of the, what am I looking at here? This is the 30-minute chart, okay? So I'm going to jump to a higher time frame so we can go ahead and get some bias on what's happening. Yeah, I can tell you that price actually wants to reverse up on the EUR USD, if nothing else if nothing else for the short term, right? So what we could be seeing is a double bottom. I'm going to go to the 3-hour chart. It's a weird time for the EUR. It's the overall look is bearish, but there is, I think it's just going to be sort of, how do I put this? I think it's just going to be, let me delete this drawing here. I think it's just going to hang out in this area until it makes a decision, right? So price has been more or less range bound for some time on a lot of assets. And, you know, we're in August. This is an August thing. Volatility drops. The big money for a lot of people is on vacation. Your big wigs, they're taking their kids places. And you know, if you want to look at the market from a retail versus institutional perspective, these moves, when price gets a little bit more volatile, that's going to be your big money. That's going to be your institutional types. And then when price kind of ranges for a while, doesn't do anything, that's going to be more of a retail, right? So institutional is going to move the price, retail is going to churn the price, CHURN, churn. So what will happen here is that if you're going to think about this algorithmically, right, while price is churning, again, CHURN, when it's just going back and forth in a range, you're going to want to look at an algorithm that is going to work for a range. So the top and the bottom of this range is going to be a good place to look for a price reversal. Now, price did poke down last night through this, and there is an older support back here that is, you know, going to threaten a lot of sellers. A lot of sellers are going to see that and not want to go past that. You know, I mean, I was able to make a little money shorting yesterday, but the trade that I entered during the show, I did exit that a little early. And as you can see, I did the right thing. You know, I mentioned it in the chat as I exited, and I took a little profit. I think I was better than 50% to my target. I shouldn't say that. No, my target was like a 3-to-1, but I was 50% on the way to a 1-to-1. So those of you in Algo Factory know what I mean by that talk. But long story short, I had made more than half of my risk on that one. So I was risking whatever, you know, some small amount, maybe $100, and I made $50 and got out because it wasn't a high confidence trade. I'm not going to put $1,000 on something that's, you know, that has a low probability, especially in this grindy Augusty market, right? So right now it's a decent probability that price is going to sort of flounder. It's going to want to go down, but it's going to bounce back up. And that could look like a lot of things. It's not quite as predictable as one might think. So, you know, you can kind of get this jagged bit here and then go up and then head down. Again, the overall sort of bias is price does want to go down for the moment, but again, that can flip as well. That can change. So what we have to do in this ranging time, if we're going to look for a trade that's going to be, you know, outside of that range, we're going to have to look for price to make a decision. And when it does, we have to bear in mind all the structure with which price has to contend. So if price does break out, and I mean break out and stay broken out below this range, then we're going to look at this structure back here that's going to want to keep price from going below that. So, you know, the real play, you know, at this point might be to be careful in here because it's probably still going to range. And again, while it's in August, that's a higher probability. You're not going to get as much follow through in August. You know, you look at this, look at the calendar. I'm going to drop a vertical line right where August begins and look what happens to price. It just ranges. That's it. We had a similar bit of time here back in late June through early July, because July 4th is always going to be a kind of a, you know, another time when people take vacation. That last sort of month of June, early July, people, you know, take off, but then look, people come back to work. And so we had some market action here too. A lot of news in the international sphere. And even in a month like August, if there were or if there were to be news in August, gosh, I don't know if I should go subjunctive on that. But if there were to be news in August that was heavy news, of course, this ranging action would go in one direction or the other. But in this case, I would overall be watching. If price broke down this way, then I would look again, like I did yesterday, for a pullback and to possibly short it again. Algorithmically, though, I will know whether or not, or at least I'll have a good idea of whether or not that is going to continue downward, and if I need to actually exit and jump out. The other end of it is if price were not to break to the downside, but then were to eventually make its way up to the upside. If price broke out, I might enter at the breakout, but there's some issues with that I'll point out. So I might look for a pullback and then enter for a long, and use that upper structure from this prior high back in this area as a point to exit. There are some areas to look at on the way up as well. There's this bit of structure from that peak. So let me zoom into that. So where price popped up, where that blue dot right there is, so that could be a place where price rejects. So I might want to wait for price to break above that before taking a long. And then there is going to be this structure with which price must contend up at this 111.53 area. So always watching the structure. And of course, I do have algos that will warn me if price is getting weak around that, and I can raise my stops and or take some profit off the table. You can also call raising stops, you can call it taking risk off the table. So that said, you have a little bit of a double structure right there. So this is an area where price could reverse. So this again it's a great market to scalp. As of now, price is wanting to head up after that news. There was a wick downwards based on the data, but what we've been seeing in August is that the data has only a temporary effect on the market, just like we talked about. So once the market resumes a direction, I may look for some kind of pullback or something that I could play. And I'm going to zoom into a lower time frame on the EURUSD so that we can even have an idea of what that may look like. Give me just a moment. I should say give TradingView just a moment. Let's see here. Yeah, I think price, I'm going to go to the 30-minute chart here, and I'm going to tell you what I think price is going to do. Okay, I think price is going to flounder around the bottom of this and then eventually make its way up for at least the short term. So the rest of today might kind of just be rangy. There might not be a lot of opportunities aside from some scalps, but I think eventually it's going to start to head up. I could be wrong about that, and I'm not going to trade that necessarily until I have a clear idea of what's going to happen, but at least I can have an expectation of what price is going to do. And I'm looking also at a bit of a mini range, right? So price is a range bound within range bound in this case. And let's see if I can get a rectangle out here. And so basically you have, I mean, it's not that clean, but you do have price sort of bouncing in this area. So once it breaks out, there are some local structural areas with which to contend. But the right kind of breakout is the type where you don't have to worry quite so much about those. You can go back to this older structure as a potential guide for exit. But again, this is all going to happen as it happens. I'm not going to anticipate that. I'm going to be more reacting to that, especially in this very choppy market. So that's the EURUSD, and we're getting towards the end of the free part of the show. So I do want to give everybody a chance to ask questions. I can see a lot of people in the YouTube chat are already with us in our private group. Eventually, this will include some people who are not in the private group to ask questions. We always welcome that. But in the meantime, does anybody have any questions? Does anybody have a chart they want to see? And as everybody is formulating those questions, if any, we're going to take a look at gold. So gold right now, as I said before, is on kind of this choppy downtrend, and it's the August blues. It's the doldrums, right? There's no wind to blow the sailboat around. Okay, so let me go ahead and okay, we're looking here. I'm going to look at that. And let me look at a little higher time frame here. Let me bring out some panels. Look, there's an overall downtrend. Okay, so that's clear. However, even on the downtrend, there is structure with which to contend. So where's price on this chart? It's weird. Hold on a second. Let me get this high time frame chart figured out. I don't see any price. Hello. Okay, there we are. Yeah, so price is on a downtrend and it's at a local structure, so it may or may not bounce. The downtrend that price is on is pretty low volatility, so a bounce is a decent probability. Yes, that's on the 5-day chart. I wonder what would happen if I go to the monthly. Look at the super high time frame here. See if we can get some more information on bias. Okay, let's open this up. Yeah, it's a very high time frame bias. Yeah, so yeah, overall weak downtrend. Let's put it that way. Let's go back down to the 5. Well, okay, so price has been ranging since like 2020. So we'll go ahead and use that data and we'll create this box. And we're sort of at the bottom of that box, or we're not the bottom, we're sort of at the top of that box right now, but that's super high time frame data, right? So we're not quite as concerned with that right now. We just know the price is ranging, say, between about 1700 and 2070 on the high time frame. Okay, we're kind of towards that higher side, but I'm going to jump down a little bit lower to the what is that, the 18-hour time frame. Okay, so this is going to have a lot more relevant data. All right, so we have structure right there at 1890. We have a downtrend, but we also have sort of an indication there may be a bounce. It would not surprise me one bit in the next few weeks to see price make its way down here, perhaps range a bit, but maybe not for long, and then start heading back up. But the move back up might be short term. So I would probably use a fib to figure that out on a higher time frame. Yeah, so right about where the arrow is. Let's say it bounced back up to 1950. And then if that downtrend persists, that sort of short-term downtrend, if that does persist, we might see a move back down after that. So that's the look on gold right there. Okay, so again, what we do here is all those squiggly lines you see at the bottom of the chart that I'm about to bring up, all those are indicators, okay? Those are all mathematically derived indicators, and what they do is they help us determine what is going to happen with price in the future. And anytime you can tell, or at least to a statistical degree of certainty, right, to a probabilistic degree of certainty, anytime you know you're going to have a certain percentage chance of predicting price correctly, then you have a chance to make money. And so what we do here is, you know, at Algo Factory, we have experienced personally a lot of people losing their jobs recently and the last couple of years. There's a lot of inflation. There's a lot of need for the ability to make money independently of a boss. There's a lot of need for supplementing income. Like I said, maybe you have some extra bills, maybe your job isn't cutting it, maybe the rise in gas prices and food is starting to eat away at your savings, whatever that might be. So what we have is something where, it's not a get rich quick. It's not something that you're just going to jump on and make money at. We do have some ideas coming that might help fast track a little bit making money, but in the end, we're not here to just give you some formula, say, hey, use my formula, you're going to get rich. We're going to help you build your own, understand the markets, know what you're getting into, conserve your capital, treat trading like a business, learn trading psychology. All these things are what are going to help you if you decide to become a trader. They're going to help you become successful, stay successful, not lose your money. And then you could build yourself a nice little business. It could be a side business. It could be your main business. It depends on a lot of different things. When it comes to that particular conversation, I do think it's good to have more than one income stream and not rely solely on trading. That's a good idea for a lot of people. There's psychological reasons behind that. But at any rate, what we are here to do is to let you know that there are answers. If you're in a situation where you feel like you're kind of trapped, you're at work, it's a dead end thing, you don't see any possible raise coming anytime soon, that kind of scenario. There are answers to that. You can keep your job if you love your job and still learn how to trade on an hour or two a day. It's possible. And if you go over to algofactory.tech, again, I'm going to flash the QR code on the screen along with the website. We can go ahead and give you some ideas on how to do that. If you go to that website, also there's a contact us screen, so we can go ahead and talk to you. You can email us, because I don't want you to email me. I don't know what emailing is, but you can email us and we can answer questions that you have. What is our program like? How does it work? Those types of things. And we love to hear from you. Those of you who are here and in the chat and talking to us, we love you. Thank you for coming in. And if you're watching this after the fact, feel free to comment, especially if you have questions about what we talked about today or anything like that. I'm going to go ahead and end this right now. I'm going to move over to our private group. But again, thank you all for coming on to YouTube, and we will catch you